very quickly, I'm Rafiq Ahmed, managing partner here at Dipalo Ventures. This is a fund that we kicked off 2 years ago with MPC's Mitul, Patel. And really the idea was investments in venture capital tend to be just around software, and the physical world, the one we live in, requires solutions that are physical in nature. So you have to have VC involved in hard tech, and really have a way to do more than just write a check. So our methodology has been to be hands-on, more technical in our diligence. We have a program called the residency where some of our portfolio companies go through. So really, I can talk on end about myself, but my background is in software and hardware and design. Had a startup that we sold in the mid-teens, and that's 2015, not mid-teens in dollars. But we started angel investing, and eventually around 2019 had the idea that we really need to get into a fund and scale this. So I went and found a kindred soul in my Motorola Google ecosystem, and that happened to be Mitul. So Mitul, over to you.
Thanks, Rafiq. So from my perspective, I've been focused on hardware technology development my entire career, going on about 15 years now. And this, especially in the startup world, there was this pervasive thought that hardware is hard, and funding was primarily going to software SaaS focused companies first, and hardware was always the second priority for most VC firms. And so Rafiq, when Rafiq and I got together, the thought process was pretty mutually beneficial, let's say, where bringing hardware focused or hardware centric development to the VC world, whether it's audits, residency, whatever you want to call it, but a lot more focused intent on hardware and not just finance and not finance models, which is the vast majority of where the trend was, and that is changing as more accelerators and other ecosystems are popping up. So this was a great way for someone that's been deep in hardware development to partner with someone that's been doing a lot of angel investing and a lot of other VC activities, but never focused on straight hardware development or hardware funding. And so that's kind of where the two forces aligned. And I think so far we've got a great start to what we've envisioned.
So Anna, are you going to just touch on some of the topics, or like what can people expect from this series before we get into the team?
Yeah, so during this series, we plan to have a number of guest speakers on there, some being Dipalo portfolio companies, other being, foundation founders, experts in the hard tech space itself, and many more. And we also encourage, if you have a topic that you're interested in learning more about, we encourage you to let us know, and we'll be sure to try to work that into our agenda for this series, because we really want to make it centered around what you guys as the audience want to hear more about.
Very cool. So I guess we can go around, right? What's next? Like we have a number of our team members here, and I guess let me just preface it. We've had the fortune of working with the MBA schools in Chicago, Booth, Kellogg. We've got a couple of folks from IIT, and really have bootstrapped this emerging VC fund and firm through the talent that we've been able to assemble. And so people wonder, how do you run a small fund with this much talent? Well, we do because of programs like VC Lab and Venture Labs, et cetera, the different schools where people rotate through. And we've been fortunate. We've had people stay on in a part-time capacity. Others have become LPs in the fund. Essentially have built up a really nice ecosystem of supporters. So that's the magic. And I guess since we have the team today, it would be great to hear everyone's perspective. So maybe starting introductions, we can start with Akanksha, who might be the person that's been here the longest with us.
Thanks, Rafiq. And thanks, Anna and Monika, for setting this up. So I'm Akanksha. I work as a part-time senior associate with the fund. My background is in investment banking, and I went to Kellogg for my B school, which is when I was introduced to Dipalo as part of the VC lab that Rafiq was mentioning. So so I started with them as an internship back in mid 2020, and then in 2021 I joined them as a part-time associate. So I look at diligences and deal flow as and when required. I'm otherwise based in San Francisco, and I work in the corporate finance team at Google. Just in terms of what has been the most exciting part of the fund, especially over the last couple of years, I think has been that Dipalo is a very hands-on or operational VC. And so it's really interesting to see the whole life cycle of the investment, where we obviously do our diligences, talk to the CEOs. But on the other side of the investment, just also helping them either through MPC and Mitul or otherwise, like get to launch or get their products into the market is also a very exciting journey to go on with the founders. And I think we are very well equipped with our backgrounds in technical expertise, led by Rafiq and Mitul, where we are able to give very good reviews and advice to most of the startups, and we can like share case studies on some of those too in the future episodes.
Perfect. Thank you, Akanksha. And Jay, do you want to go ahead?
Sure. Hi, everyone. I'm using Rafiq's mic at the moment. Hope everyone can hear. So yeah. I just started in Dipalo Ventures last year in September. I was looking for an internship. I'm a big finance guy. I majored in finance in my undergrad at UIUC, and I'm doing my master's in finance as well in IIT. At the time in September, I was looking at different asset classes. I was already investing in stocks and bonds, but this category of venture capital and private equity in general really interests me because it's not really available to anyone. And I wanted to learn more about what goes on behind the scenes. So I really appreciate having this internship. I'm looking at a lot of deals, assisting all fundraising activities, and so far everything related to our fund. So nice to meet you, everyone. And I'll pass to Monika.
So, but Jay, by the way, is our resident musician. So later this spring, when we do a barbecue or when the snow finally melts, he's going to show up with the guitar.
Well, hi guys, I'm Monika. I joined Dipalo almost a year back as a marketing intern, and now working as a full-time outside a long journey. But when I joined, it was more of like getting an internship because it was like spring and COVID time, not really good to find an internship. But luckily, I found it, and it's been a hell of a ride because I think Tawfique is an amazing mentor, honestly. He legit push you to the core to do your things, and then you kind of, when there is something that you feel like, oh, you're gonna do something bad, he will just correct you. But I got a chance to work on fundraising side in summer. We organized our first collection event. It was a huge event. Limited people were involved, but yeah, it's been cool. I started as marketing. Now I'm doing like analyst role. I'm getting more into fundraising and how the entire VC world works. So yeah, I think
little known fact, just to interject, fundraising, right? So ultimately, there's not a big difference between startups and VCs. We're always fundraising, and as a venture capitalist, I think I've spent a fair amount of time fundraising, whether you're doing it for your first fund, you're looking ahead to your second fund. I'm not sure when you're not fundraising. There's supposed to be this lull period where you're not fundraising, you're done, you're in your final close. Ours is coming up this quarter. It's our final close for sure. Never again will we raise for fund one. You heard it here. But the interesting thing is startups always realize this when they start dealing with emerging VCs that, hey, you guys have the same problems we do, because you got to fundraise, you got to do pitch decks. There are remnants of a pitch deck behind me on the wall. So Monica, yeah, has been involved with that. Somebody should talk about collections that was there. Maybe Munir jump in because people don't know what collections was.
Hey guys, yeah. So my name is Munir Tawfique. Been with Dipalo for about a year and a half. So just really quickly, my background is in management consulting, and I, with a co-founder of mine, launched a startup called Prinsta, where we worked on developing 3D printed electronic parts. So that's really what got me into hardware and hard tech, and Dipalo was kind of the perfect fit to continue learning about different hard tech companies and technology out there. But to Rafiq's point, yeah, the collections event was more or less a fundraising event where we had to show our existing LPs, but also show prospective investors what the fund is all about. We showcased a couple of our portfolio companies, and it was really great to have folks really just see, tangibly what is it that we're investing in, and how the companies have benefited from our involvement. So for example, I think everybody was really blown away by Immersed. I remember when we took people out to that booth, they put on the headset and they started playing with it, and they really understood the future of work, and AR, that intersection, AR, VR, that intersection. They really could see it tangibly. So yeah, I don't know if there's anybody else who wants to chime in on that event. I think Akanksha, Mitul, Monika, you guys are all there. But it's really cool to, tangibly see the impact of what we're doing.
Yeah, Chicago just doesn't have enough of these hard tech events. And I think last year was a little bit of a smaller crowd, but this year we'll collaborate more with the ecosystem. Would love to do it where many I don't know if you want to add anything, Mitul or Akanksha, you guys were.
Yeah, well, I think one thing that was neat about collections, we've got such a wide variety of companies at various stages of development. And that's one thing that makes hardware more complex, is that it's not only, expensive, but there's design elements, there's supply chain logistics, there's warehousing and fulfillment, and there's so many different phases of hardware dev. So as a firm that's created, let's say a cohort, it's not a cohort necessarily, but a group of companies that are at various phases of hardware dev, it also turns into a nice ecosystem where, at collections, all these companies can come together and also network about each other's struggles and where various, journeys have gone, and it becomes a lessons learned for everyone else as well. So it's kind of a nice way of bringing everyone together, and being in different phases of development actually helps in terms of our own ecosystem.
So
thanks, Mitul. I just wanted to preface and let you guys know too, if there's an audience, you guys can ask any questions of what we've covered so far, if you have any. And then I think last but not least, introducing Andres, if you'd like to give a brief introduction.
Hi, everyone. I'm Andres from Mexico. Currently full-time MBA student at Chicago booth. So I've been working for 3 weeks, trying to learn as fast as I can and as much as I can about the venture capital industry, with working with the Dipalo Ventures, trying to help them, and also like a mutual benefit for both of us. My background is in private equity and infrastructure, so I have worked there for 4 years, analyzing multiple projects in private equity, with a special focus on infrastructure, focused a lot on financial analysis, due diligence. And then once the companies were acquired, then we shifted more towards the operational aspects of a company. So trying to solve those inefficiencies and increase revenues, reduce costs, etc. So happy to be here.
Just a quick intro. We'll come back to Andres because he's got some PE experience that's interesting. But hey, Ryan, are you there? And are you going to come on camera? Anyway, jump in. Give a quick intro to yourself.
Yeah, hey team. Sorry I'm late. Ryan Sakwa. I am a current MBA student at Northwestern Kellogg, doing that part-time. I work with Salesforce full-time as a business value services manager, basically a pre-sales consultant working in our financial services industry, serving folks like venture capitalists, private equity, banks, wealth managers, et cetera. and I'm excited to join the team to help out with some due diligence, some memorandums that we're working on, and helping out with fund two. And I just had a recent addition to our family a month ago exactly, which is why I was late to the call, dealing with some baby stuff.
Yeah, congrats. There's
Thanks, Rafiq.
That's always a blessing. Hey guys, so I would love to maybe go backwards a little bit and review, like, what's the difference? Like, if I'm a student out there and I'm getting started in VC, what's the right path? How did you guys end up here? Do you have to be at the top schools? What's the experience like between a PE fund, Andres, that you were in for 4 years versus, in a bootstrap sort of hot seat, small office environment that we've got you in right now?
Yeah, so I've only been here for 3 weeks, so have much more to learn about VC in order to make a proper comparison. But I can share a little bit of how private equity works. So in private equity, we traditionally looked for more established companies. So that means longer due diligence processes, investment processes, sometimes up to 6 to 8 months. What I've seen so far in venture capital is much quicker investment times, and basically that's a big difference that I've seen. Also, there's less focus, I would say, in private equity in the operational team. I guess it's easier to replace the operational team as opposed to venture capital, that the idea is more dependent on the founding team. So I would say that that's also one of the main difference. And also, I think that private equity could be considered a little bit less risky, but also much lower IRR. So that's also an upside that I've seen in venture capital, where traditionally, if things are done properly, there's an opportunity for higher returns, higher IRR. So the upside is sometimes much higher.
Yeah, so you guys that work on a lot of the diligence memos for us, maybe on the financial model side, yeah, we spent a lot of time looking at tech, which is definitely the key part of our story. But in terms of financial modeling, how do you, what are some tried and tested things that we're doing that you would want to talk about? Akanksha, Jay, you've been doing a bunch of these. What sticks out? How does Google corporate finance differ from a VC analysis of a project?
So at Google Corporate Finance, we don't have, we have a trading and investments arm which looks at how cash is utilized, how we utilize our cash in our in funds, in money market funds, and other like stocks and equities that we can put our cash in. So it's different. But I think building on what Andres was saying, just in terms of how we do valuation, it's quite holistic. So the one thing with VC valuations are that a lot of the numbers are obviously extrapolated, and a lot of these funds are pre-revenue. The targets are pre-revenue, and so we focus more on talking to the management team and talking to or looking at peers and understanding where the market is, what the potential is, as opposed to really delving deep into the numbers, because at the end of the day, you don't really know what the potential uptick can be. And so we do quite a holistic diligence with financial diligence. So there's a lot of comparing to the market, looking at DCF, which is cash flows, taking what models we've got from the target, and then applying our own analysis and our own discount rates. So thinking about how to get to the discount rate is also some of the work that goes into when we are doing our diligence. And then apart from that, I think there's a lot of focus on where we think what the potential is of the management team. So talking to the CEOs and talking to the operating team and understanding where they could be in the market, or what their plan is, what their business model looks like, because it also builds into how we can help them and where we can provide value. So it's a very 360-degree sort of communication, because we not only want to see where they're going, but we also want to see where we can help them, and then try to get that into our returns calculations.
Thanks, Akanksha. And Mitul, I guess on the other side of it, looking at the hardware itself, what kind of due diligence do we do here at MPC with Dipalo's due diligence process?
So we have a intake form that we created, which is really just a high-level snapshot, or it gives us a high-level snapshot of where the companies are at in their dev process. And so since we are an early stage VC, or trying to focus on early stage companies, the goal here is, are the adequate staffing and budgetary plans in place that make a good business case? And so it's not to say that we're not going to invest if you have no prototype. But we're looking at, okay, if there's electrical work, mechanical work, embedded firmware, maybe there's an app or a backend system. If it is a massive scope project where there's very little budgeted for XYZ headcount against the current snapshot of where the development plan is, that would be a red flag. But if there's a good, nice plan put in place, either through intake or other documentation, there's a product requirements document outlining exactly what the product is doing and the business case behind it, or the target markets that we're going after, what the go-to-market plan is, that gives us a holistic story that the team that's in place, whether it's a solo entrepreneur with a outsourced design team, or it's a group of people all within the same organization that have come together to build a product, are the right skill sets in place to drive to success. So everything else is out of control. In terms of supply chain and logistics and other things that pop up in hardware development are going to still pop up. So we're looking for, is there a pathway for alleviating those without, completely going upside down with the planning or budget concerns and things like that. So we're looking for a stable plan, regardless of what product development phase you're in.
Okay. And then Rafiq, did you want to add anything in terms of the residency program that Dipalo Ventures offers?
Yeah, I mean, look, we have this fine balance between using the residency and our technical diligence to sort of de-risk and understand what those gaps are, and then hopefully help the companies mitigate them. But there's also a counter argument in running a portfolio, which is a daily thing, because you're trying to invest early in companies, but inherently they have more risk. Products not yet in market, you need a longer time horizon, you need more patience. So I love what we've done with the residency. I think going forward, what we're looking for is how to execute these that add as much value as possible. We're not an accelerator. The program is meant to really help founders in specific areas where they need help, as opposed to run through a generic accelerator and we'll teach you a lot of things you already know. So I think we're evolving the definition. And as we get through the rest of Fund 1 and we look forward to a next fund, the definition of what we do hands-on may change. And it should, because we get feedback from our portfolio founders. And if anybody out there has gone through it or has applied with us, has feedback for us, we absolutely want to hear from you, and anybody that's building product, we want to hear from you as well. So yeah. I was going to ask the team about just kind of touching back on the finance part. How do you guys, what's your take on financial projections? Because I think founders sometimes struggle. Everyone's passionate about their product or their idea. Finance always comes next, and projections are sometimes fairly wild. But of course, with maturity, that's not as big an issue. But we see these in later stages too. And it's all interesting to go back and look at your original diligence memo, and then when you follow on, you're updating that memo as Akanksha and Ryan are doing now in a couple of deals. And it's interesting to go back and look at like even fairly mature companies, what were their projections like versus where they are a year and a half later. So I don't know if you guys want to touch on that, and anybody on the team, just like what we're doing with projections, comparables, that sort of thing, discounts. Anyone?
I can take it. I think in terms of projections, we are aware that a lot of it is, like you said, founders' estimates and their expectations on their products. And so we apply a really heavy discount rate. This is not the market discount rate. Beyond like the discounting for future cash flows, we discount even their projections by a lot, almost to like between 30 to 50% based on like where they are in the cycle, how much success ratio do we think they have. Based on that, like we discount very heavily. And then we get to our valuation. That's one. And I think in terms of like comparing actuals to forecasted, I feel like the pandemic played a big role where quite a few of the projections were heavily impacted because of the pandemic. And so definitely the forecasted numbers were higher than the projected, especially for 2021, because it was expected that numbers would be better in 21. And so we are hoping that in 22, these like the difference, the variance between actual and forecasted is lower and lower. But we are aware, and like I think it's very firm dependent. Like if you're looking at something which is very consumer focused, very not something which is going to be impacted because of the pandemic, then we'll look at it differently in terms of the discount rates. But more often than not, we are quite conservative when it comes to setting valuations.
Akanksha, you owe me a diligence update. Actually, now that I've got you on live stream TV, what's the deal you guys would tell your I don't know, your grandkids? I don't know if you tell your grandkids about any deals, but Munir, Jay, anything that you've particularly enjoyed? Anybody, Ryan, Andres, jump in. And this is our portfolio companies, not people that maybe we didn't invest in. So
yeah, I mean, I think time will tell, right? But I sourced Car Scanner, and I think so. Just for people in the audience, Car Scanner is a portfolio company that uses a kind of an apparatus on a rail, if you can visualize it, that scans a car and identifies any body damage issues. So, you know, the immediate consumer is car rental companies, insurance companies, things like that. But I think what's really interesting is if they can start selling to OEMs and, you know, give like BMW or Toyota feedback on cars that are 10 years old or 5 years old and see what the typical damage is on the body, on tires, on wear, things like that. That could be very valuable for those companies, and that could really benefit, you know, Car Scanner as well. And then, you know, in 5 or 10 years time, you could see that when you drop off your car rental, that you might actually go through one of these things that scans your vehicle, right? So it could, you know, significantly change the way cars are inspected and the data we can get from automobile usage. So I think that was an interesting one.
So Car Scanner was my first trip to Poland, actually. So we do go beyond Chicago. We've got about 5 portfolio companies in Chicago, and then a couple in Texas, Indiana, Wisconsin, and in Poland. And so I think it was a fortuitous timing where I happened to be in Europe and we had just closed on the round. So we were able to kick off the residency with Car Scanner in Krakow, which was a lovely place to visit. The team has since moved to Syracuse. They were part of a Genius Accelerator. I think that's robotics and AI. So we have a lot of hopes for how that progresses. And, part of what we do is also guide and be mentors as teams need us. And sometimes they don't. I mean, they may have product development studios, et cetera, in-house engineering teams. So we really have a mix of different teams in the portfolio. Mitul, do you want to talk a little bit about any of the that are coming up this year, and really maybe for everyone would be nice to know what we're looking forward to in 2022.
Well, I mean, you mean like pertaining to our current trajectory?
Well, different threads, foundation. I don't think you've mentioned the foundation.
Haven't mentioned the foundation. So we are personally on MPC side, we are pivoting a little bit towards more health-focused companies. Not to say we exclude any customer really of any product category, but we are focused on impact companies in the healthcare arena, and then even more specifically women's health. Whether it's a startup, established company, technology, software, doesn't really matter. Hormone tracking, it could be a whole variety of arenas, I guess, let's say, but focus on women's health. And that is a partnership or a dovetail into a foundation that I started last fall, actually, that is primarily focused just on women's health and progressing research and technology development towards preconception, reproductive health, and then post reproduction to menopause and all the medical issues that come in between. So that's been a really an amazing way of generating new companies. And then as far as the different entities are concerned, it gives us a nonprofit passion project that MPC is putting quite a bit of focus into, but it also gives Dipalo another potential pool of companies to really focus in on that may generally not get enough focus. And with the diligence that we are able to provide on the technical front, it gives another foundation for sound investment strategies, at least on the technical side. So got a lot going on in 2022, but it's a nice symbiotic relationship between funding, design services, and then now a nonprofit that we've started.
And in addition to that, Mitul, do you want to touch on the golf outing that will be taking place this summer?
Yes, so happy to have Dipalo's backing on this. We are doing a golf outing on May 24th. If anyone is interested, please let us know. But it's more than a golf outing, which is why I think it's important to bring up. The women's health arena has a lot of unknowns built into it. A lot of men actually and women don't know what really is all that goes into women's health, and especially reproductive health. And so it's a 3-pronged event where the central prong is actually sponsored by Dipalo, and we're trying to do a tech showcase where we bring companies to the event and allow them to showcase their technology, whether it's fetal monitoring, hormone tracking, genomics, but really put shine a light on these companies. And on one side of on the trifold, you would have folks that are coming out for traditional golf. It's a fundraiser still at the end of the day. And we want to get those folks out there, but make it still an educational event to say, all right, what are you here for at the end of the day, and what are you actually supporting, so that there is an educational element to this. And on the other side of the trifold, there are families that have experienced fertility issues, which is a very huge mental health and anxiety inducing situation for most families that have to go through fertility, fetal loss, pregnancy loss. A lot of families are looking for answers of what's next. And the tech showcase allows for that central theme and provides inspiration. And so what Dipalo is really backing us on is the core central theme of this event, which is like I said, it is about golf, but it's really about providing inspiration to one group of people and providing education to the other half. And so definitely, happy to have your support. And if anyone listening out there wants to participate, volunteer, we're happy to bring you into the fold and get more participation.
Can I mention one of the startups we just spoke to from kind of your foundation introduction? So yeah, we spoke to a founder who lost, they lost their child late in pregnancy as well, and had this idea of like, okay, how can we sort of improve what's done today, what's been done for decades in terms of understanding the health of the child about to be born. And so I think they didn't have a way to, the blood oxygen level is what is generally measured, right? And Mitul, correct me if I'm wrong, but they didn't have a way of really getting pH. And pH is a much better indicator of oxygen levels and how the child is faring. And so what he's done is created a product that piggybacks on an existing sort of, I guess, probe. But those are the types of companies that are interesting, I think, to Mitul's foundation as well as to us from at least part of our portfolio standpoint.
I think the important part with that story, Rafiq, is that there's tremendous passion behind the entrepreneurs that are bringing these products to market. It is not purely a financial play, and that may not sound appealing to a VC, but the passion will drive success, and it drives the product development to levels that basically will exceed a purely financially motivated product. And so I think that's important to also talk about, is that passion needs to be there. And we're seeing a lot of companies that, if you have that passion, a lot of these revolutionary companies start with a health issue in the family, whether it's oncology or dementia or any field. And so now that we're able to narrow in on that field, we're finding a lot of those situations where we will see that path to success because the entrepreneurs are hell-bent on solving a critical need.
And speaking of passion, I guess the last question to the team for me is, what are we passionate about? So as you look to build careers, whether it's here, you flavored VC, you move on, or more immediately, like what is the next year or two? What are the things that are impactful? Because if we weren't passionate or impactful in our work, then certainly none of us are getting paid any exorbitant amount of money to be here and try to start a VC fund. Anybody can take that. What are the big themes that we think are going to be interesting for us to continue to evolve in? Anyone?
I can speak on this. I think from a grand scheme of things, it's very important, especially in a society like America, it's important to allocate capital in the right places. So we're not really just investing in founders and startups. It's more of, in the broad scheme, we are investing in research. We're investing in the products that will solve real problems. For example, climate change. That's a really important one. So for products to come to market, like, the passion has to be there, but the financials also have to be there. It has to make sense financially. So I do believe that we play a major role in allocating capital where it needs to be.
That's to whoever. Munir, what are you passionate about?
Yeah, I mean, I think when I was in consulting, right, the reason I left is because it's a very academic exercise in a sense. Like, you build a strategy and you kind of hand it over. So I've been looking for a more hands-on operator type of role, and VC is interesting because, coming from the startup experience, I can relate to founders. I can, especially with hardware, there's so much more than just, writing a few lines of code. There's the software piece, there's hardware, there's supply chain, There's certifications in some cases, FDA approval. So I really want to get, hands-on and ultimately take on more of an operator role. So for me, I'm very passionate about it because I get to see what the different things are that people are working on, different technology that's out there. And ultimately, get into an early stage team and build out a product. And like Jay alluded to, I think climate tech is very interesting right now because, especially with this administration putting in all the money that they're putting into achieving climate goals. But I think that the public and especially the business community has started to come around on saying, not only is there a need for this, but there is actually a significant financial impact of achieving, these climate goals. And of course, there's hundreds of companies that have signed climate pledges, very different state level regulations that are coming out that are pushing more green outcomes. So in terms of like a broader scheme of things, just understanding technology that's out there in the hardware space and also more focus on kind of these impactful goals like climate and others.
Software alone is not going to solve climate problems, and I think this is a space that we're going to play in and hope to bring you some great content through the rest of this year. Guys, from the MBA side of things, Ryan, Andres, what are you, what would you advise people to, or just what are your thoughts before we wrap this up?
I definitely think that given the state of the world, there's never been a more appropriate time for this intersection of software and hardware with the interest of making the planet a better place from a climate standpoint. So really excited to be seeing some of these technologies that are at the forefront of this. And kind of like Munir said, only time will tell. And so it'll be really fun to see in the next few years where some of these firms are in the technologies that they're providing.
Do we think it's a fad, or does this time around impact is more permanent? That's one of the questions that I think is in every investor's mind, certainly, because we've had green tech, clean tech, and all this stuff before. Thoughts? Sorry, I keep asking questions. I should let this. I should end this. Let Anna finish this webcast. So we could go on. We'll just leave that as a hanging question if nobody wants it. Anna, over to you.
Well, thank you everyone for attending our first episode. If you enjoyed it, then you can tune in on the third Wednesday of every month at this time for a new and exciting session with a special guest every time. So if there's also, I mentioned this earlier, if there's any topics that you'd like us to cover, please reach out to us directly on our social media platforms or leave a comment in the YouTube comments below. And we hope to see you in our future episodes.
And do we have a quick plug for February? Do we know who's going to be with us and what we're talking about?
Yeah, so for our February session, we will be having Immersed come on, and Immersed attended the collections last year with Dipalo Ventures, so we are excited to have them back. They're one of Dipalo's portfolio companies, and we look forward to speaking with Renji and having him aboard for a conversation with us.
Yeah, Mitul and I just jumped on a call with him last week, was it? I forget, but we will be talking metaverse. There's a lot of interesting things happening with Facebook and Microsoft's acquisition of Activision just announced. And so Renji will give us the 411 on what's happening in the metaverse, things you can talk about. Okay. All right.